Over 500 business groups have drafted an open letter to lawmakers and the next administration in regards to tax cuts because the current tax policy is set to expire at the end of next year, which would absolutely hammer the American people, businesses, and the overall economy. Well, that's the focus of the video, as I want to break down all the details of what this means and what does it mean for you as this tax policy is set to expire, as we're going to see taxes increasing massively if they don't extend these cuts. So let's get into it and talk through the details. First off, can I ask a huge favor of you? Please make sure to like the video with the big thumbs up button right down below. Thank you so much. I really appreciate that. Also, if you haven't done so, please make sure to subscribe to the channel as well with the big subscribe button down below. Thank you so much. Really, really appreciate your support, and let's get into it and talk about it. All right, so about 7 or so years ago, the Tax Cuts and Jobs Act, otherwise known as TCJA, was passed into law. This was massive tax cuts during that time and spurred massive economic growth through individuals, businesses, and the economy as a whole has been prospering from all of these tax cuts. Well, guess what? They're all set to expire at the end of next year, and this is going to be the biggest tax increase in the history of this country if these are not extended out a little bit further. So as of right now, we have over 500 different business groups all across the country that are coming together with this open letter urging lawmakers and the next administration, whoever that happens to be, we don't know as of right now, urging them to extend the Tax Cuts and Jobs Act tax cuts from a few years ago. So yeah, this would be massive for a lot of people, and this would be very detrimental to the finances. Now, this impacts everybody. Now, again, a lot of us always think like, oh, these are just for the rich and just for businesses. That's not exactly true. In fact, let me point something out for you really quickly. One of the provisions that was within the TCJA, which is, again, the Tax Cuts and Jobs Act, remember the standard deduction. I don't remember exactly what it was back in 2017, but it was about half of what it turned out to be. It was probably around $6,000 or so, give or take a little bit. I don't know exactly what it was back then, but they doubled the standard deduction. So right now for 2024, as I film this video, it's over $14,000 for an individual, nearly $30,000 for a married couple. That's massive. That's huge. Well, back then, this legislation doubled the standard deduction. So what did that do to your income? Basically what it did is it allowed you to keep more of your hard-earned dollars, because when you go to file your tax return, what's the number one thing that you do? Yeah, you claim the standard deduction, right? What does that do right away for you? It reduces your taxable income. Well, back then, call it 7 or so years ago, if it was reducing your taxable by income by, say, $6,000 as an individual, or say around $12,000 as a married couple, okay, that's cool. But guess what? They doubled it. So now it's reducing your taxable income by nearly $30,000 as a married couple, or over $14,000 as an individual. That's incredible. That's a lot of savings there, okay? So I just want to point that out for you really quickly, because a lot of times when we talk about tax cuts and tax savings and things like that, there's a lot of misconceptions out there, because a lot of people believe it's just for the rich. That's not true. Standard deduction is for everybody, literally everybody. If your income is anything above the standard deduction, it impacts you. If your income is below the standard deduction, well, then it also impacts you, because here's the thing. If the standard deduction were, for example, to be cut in half by 50%, let's just say it went down to, say, I don't know, $7,300, which would be half of what it is right now. If your income is, say, $10,000, well, now your income is no longer zero on paper because of the standard deduction. Is that going to make sense, right? So it's a great way for a lot of lower income people to wipe out their income, like literally wipe out their income to zero or very, very minimal on the federal return because of the standard deduction. So that was a huge provision within it. And again, it doesn't matter if you're somebody who is working full-time or part-time or fixed income, things like that. It helps out a lot of people. Now, here's the thing as well. I talk about fixed income benefits like Social Security and SSDI and SSI, survivor, spousal, VA benefits. I talk about all these fixed income benefits here on the channel a lot. Now, here's the thing. Most fixed income beneficiaries, a huge percentage of them, don't pay any taxes whatsoever. Why? Mostly because of the standard deduction. On paper, your income is zero because the standard deduction just wipes it all away. But if the standard deduction were to decrease, if it were to go down or something, now you have a taxable income. You see what I'm saying here, right? So it's huge. It would impact a huge percentage of people, including fixed income beneficiaries, in a massive way as well. So anyway, long story short here, We're getting all these business groups out there right now urging lawmakers, saying this has been responsible for massive economic growth, for business growth, for the economy actually doing something rather than just like being a massive, slug doing absolutely nothing, the economy. It's actually spurred economic growth over the last several years, the last 7 or so years. When we see these tax cuts come in, generally what that does is it gives individuals, you and me, it gives businesses, and it gives all kinds of different sectors basically more firepower. When we have more money to spend, what do? We spend more money, right? It's just the human nature of most people is that if we have money, we spend it. If we don't have money because our incomes are, reduced for some whatever reason, if we don't have the money, generally we don't spend it. But if it's there, we go out and spend it. What happens when we spend money? We stimulate the economy. It spurs economic growth. When we go out and spend our money at local retailers or online or whatever it happens to be, whoever we're trading our money with for goods and services, they're using that money to buy inventory, to hire people, to build out new locations, to invest in infrastructure, to invest in all kinds of different things to build their business, right? So at the end of the day, a little bit of extra money in our pocket goes a long, long, long way, okay? Just imagine this. If we had an extra, just for example here, let's just say that every single person in this country, which is about 334 million people, by the way, if every single person in this country had an extra $100 per month, it's not that much. $100 a month is honestly not that much, but it is helpful. If every single person in this country had an extra $100 per month right now, and we use that to spend it on goods and services or whatever we need, do you think that would spur economic growth? Massively, right? It would not be inflationary necessarily because it's such a small amount of money, $100 per person. But at the end of the day, it'd be an extra $100 that we're giving to our local grocery store in exchange for a teeny tiny bag of food, right? Or we're spending it at the local gas station for a couple of tanks of gas, or maybe for a haircut, or clothes, or shoes, or I don't know, utilities. I don't know, whatever else people buy. I don't know what people buy. I don't buy like all that much stuff. I'm pretty boring. But my point is, that would be massive, okay? So just imagine if the tax cuts were to be going away, if they were set to expire, and they are set to expire at the end of next year, if they were allowed to expire, and that money that we were supposed to have is now taken away through taxation, we don't have the extra money to spend. Now, do we go out and spend that money anyway? Some people do. It's called on a credit card. But most people don't do that. Most people just say, I don't have the money, I'm not going to spend it, right? So if we don't spend the money, then the businesses and the individuals, wherever it is that we're trading our money for goods and services, are no longer getting that money. Now they don't have the extra revenues and the extra margins to build out locations, to hire staff, to build inventory, to invest in their infrastructure and make their businesses more efficient. Do you see the cycle here? It's not that hard to figure out. So these tax cuts that have been put into place several years ago have provided massive stimulus, essentially, for the economy through tax cuts that have allowed more money to stay in the pockets of the people and in the pockets of businesses, and allowing that to be invested and basically further stimulate the economy, right? So if we see these huge tax increases coming in, which as of right now are 100% set to do, because they're going to expire automatically unless otherwise extended out by the next administration and lawmakers, if they don't do that, it's just more money that we don't have to pay for our already expensive lifestyles because of all this massive inflation. Is that going to make sense, right? So we will see what happens here. As of right now, they're doing nothing about it, but we have a little bit of time until they expire. But it's going to be interesting to watch this whole thing play out. We will see what happens to all of this and where this goes from here. But again, just another interesting point here, and all these business groups are coming out suggesting, please, please extend out these tax cuts. They've saved our businesses over the last couple of years and allowed us to build out and things like that. If they don't have that extra money that they would have used otherwise for their businesses and expanding and all things like that, now guess what? It comes in, the rake gets it. The rake, like a poker table, right? If you ever play poker, there's called the rake. The house takes their cut on every single pot. Okay, so eventually the money's all gone because the rake took it. You know what I'm saying? Okay, so it's just less money to play with, like the metaphorical poker table, right? So anyway, that kind of makes sense. Anyway, I just want to bring this to your attention really quickly. We will have to see what happens. Another thing we can add to the huge pile of different pieces of legislation, different aspects that we're watching out there right now that need to be addressed or something done with them. There's a ton of them out there. I've got a huge stack of information. Either way, I'll continue to watch it for you and keep you posted as I get more information. So anyway, hope this helps you out. Again, I'm here for you in any way that I possibly can be. Please make sure to subscribe down below. Totally free to do so. Big subscribe button right down below the video. Otherwise, like the video, thumbs up button. Thank you so much. Really appreciate that. Right down below the video as well. Otherwise, check out the other nearly 5,000 videos here on the channel. The ones I've hand selected for you down below in the description or the top of the comment section. Some very popular and great videos for you there. Check those out. Otherwise, right now showing up on your screen, you should see some videos there. Check out those as well. Thank you so much. Really, really appreciate your support. Thank you so much for being here. Have a nice day. Take care, and I'll catch you again soon.